Has Bitcoin already topped, or is there more to come? While no two Bitcoin cycles have been exactly the same, every past cycle has followed a rhythm. And this cycle, though, it's already bent some patterns. For the first time ever, Bitcoin set a new all-time high before the halving. And that's not the only twist. There are others that we'll come back to, along with larger forces now shaping the market. Now, while we shouldn't be trying to time the top, nobody's stopping anyone from guessing. So let's try looking at past cycles to see what other clues we can gather. Now, before we dive in, please remember that none of this is financial advice. This video is for educational purposes only, and we're not telling you what to do with your money. Always do your own research before making any investment decisions. So the last 3 cycles have all followed a similar pattern, each lasting roughly 4 years, which also happens to be the amount of time between each Bitcoin halving. Now, whether that's correlation or causation, we'll leave that up to you. But because of the importance of halving events, people often like to center it when trying to make sense of things. So take the first halving in November 2012. Over the next 368 days, Bitcoin climbed from about $12 to more than $1,100 before topping out in late November 2013. After that came the crash, a long slide that finally bottomed in January 15 around $170. From there, it took nearly 3 years of recovery before the next peak in December 2017. Beam has been up to a lot lately. They're not just another blockchain. With a sizable treasury behind them, it's now a whole ecosystem focused on building and backing the kinds of technologies that'll shape what the internet looks like in the next decade. Stuff like DeFi, decentralized computing, and new kinds of dApps. Beam doesn't just fund things and step back. It invests, builds, and connects the dots across different technologies to create something that actually works together. But this isn't just Beam's vision. It could be yours too. With the Beam token, you get influence over how its ecosystem grows. So it's not just about watching cool tech emerge, but being part of building it, even if you're not a dev. You can learn more from their Medium page, which we've linked below, or just keep an eye on what's launching. There's a lot cooking. The second halving was in July 2016. From that point, Bitcoin ran for 525 days before peaking just under $20,000 in December 2017. The downturn followed the same arc. A crash, then a bottom in December 2018 around $3,200 before climbing for 3 years until the market topped again. The third halving came in May 2020. This time, the climb stretched 549 days before Bitcoin peaked near $69,000 in November 2021. And once again, the same story played out. A brutal crash, a bottom in November 2022 at about $15,500, and with that, the cycle we're in today began. Now, if we put these timelines side by side, the pattern reveals itself. Each peak has landed about 12 to 18 months after its halving, and most of them have hit late in the year, usually November or December. And like I mentioned, each cycle runs close to 4 years. Apart from the first cycle in the early days, the climbing phase takes roughly 3 years, and the declining phase takes up 1. But the returns have dropped a lot. From the 2015 bottom to the 2017 top, Bitcoin more than 100x'd. From 2018 to 2021, it was closer to 20. Now, before we get ahead of ourselves and assume that the past cycles will just copy-paste into this one, it's worth asking what's actually different this time. In earlier peaks, retail was at the center. The 2017 run was driven by ICOs. The 2021 peak came with DeFi and NFTs. The energy from retail lined up perfectly with price. You could feel it everywhere online. Search trends spiked, YouTube and Twitter were flooded, Google searches went through the roof. Now, Ben Cohen's Social Risk Index, which tracks all that activity, shows that today's levels are nowhere near what we saw in 2017 or 2021. In fact, they're still at pretty much rock bottom, even though Bitcoin continues to chart all-time highs. So where is the demand coming from now? Well, some point to institutions. ETFs already hold over 1 million Bitcoin, about 6% of the supply, and companies like MicroStrategy keep adding in the background. In March 2024, ETF inflows pushed it past $70,000. In every other cycle, that kind of breakout only happened months after the halving, which has led some analysts to point out a change in how supply is moving compared to past cycles. Back then, blow-off tops were often fueled by whales unloading their coins onto retail. This time, they argue much of that supply is being absorbed quietly by ETFs and corporate treasuries instead. That said, while institutions are offering ETFs, reports show that a majority of inflows are still by retail or smaller investors. But relative to past cycles, institutions are not on the sidelines and now hold anywhere from 20 to 30% of ETFs. And then there's the macro layer. Interest rates, central banks, global liquidity. These factors arguably influence Bitcoin more than halvings or whales. Rate hikes or cuts, or even the expectation of them, can stall rallies or kick it forward again. So while cycle theory says Bitcoin should keep following its 4-year rhythm, others argue that the market is evolving as it matures, with ETFs, corporate balance sheets, and central bank policy all in the mix. So that brings us to the current cycle. Now, we already talked about how Bitcoin set a new high before the halving, but even after the halving, the pattern hasn't been straightforward. In August 2025, Bitcoin hit its latest all-time high at about $124,000, 481 days after the halving, which interestingly enough is the historical average across the last 3 cycles from halving to all-time high. However, if August was the top, then this cycle would have snapped the lengthening pattern we saw before, where each cycle peak took longer to arrive than the last. If this cycle is more in line with the ones from 2017 or 2021, then late September or October would be the corresponding estimate for a cycle high. And if we look at cycles as measured from bottoms to tops, we're currently at about day 1060 or so as of mid-October, which is on par with the length of the past 2 cycles, which were both about 1064 days long. But of course, we come back to the problem of trying to time the market. Even if you know the lengths and patterns of past cycles, calling the exact top in real time is almost impossible. Peaks always look obvious in hindsight. Pull up a chart of 2013, 2017, or 2021, and you can point straight to the moment. But living through it never feels that clear. At the top, sentiment is euphoric. Everyone thinks that the rally still has room to run. And by the time people realize that the peak has already passed, the drop is well underway. But it's not just psychology, since external events can impact markets. Black swans like exchange hacks or collapses, or the pandemic announcement can jolt the market. And these moments can feel like they could flip the script overnight. But zooming out on the chart, those events barely registered or did not break anything, and the cycles, at least the past 2, have stayed stubbornly consistent. In the end though, no one has a crystal ball, so instead of trying to time the top, create a plan that helps you prepare for a range of scenarios and then stick to it. We'd still love to hear your thoughts. So, do you think that the top is behind us? And if not, then when do you think it'll be?